All right, guys. Good morning. There's a few things I want to cover today. A few things. Some things I want to cover, but I'm gonna leave it up to you guys to do more research over it on the weekend because I don't think this is a 5 minute, 10 minute, or 15 minute explanation. The title says it all. Bonds, DXY, TNX. So we'll go over those three things. Just compare them with the charts and how exactly they work, right? Um, because next time rates are up or down, don't just make a decision based on that one thing. Next time bonds are up or down, don't just make a decision based on that. Next time the dollar is up or down, don't just make a decision based on that one thing alone. Some days it works really, really well, right? LB mentioned it right in the morning yesterday. He gave you guys a big tip. He's been following that for the last 1 year. He's tells you guys, he talks about DXY with SC back in the days, nailed so many plays off those things, but you have to understand them in depth in order to get that kind of understanding, right? So it's not something you're going to understand overnight. But SPX first, let's just go over quickly. SPX, the move we had on Fed right here was given all back to yesterday on Thursday, right? They gave it right back, a huge rip, and then gave it right back just as fast, and we broke the lows. And now we're just here holding on to support. So what happens here today? It's a tricky day, but on the weekly chart, what I do see happening is that it looks like we might just end up making this a candle, right, with a longer wick to the upside and a lower to the downside, indecisive candle sort of. And before May 20, there will be some puts that will come off in the market, which will give us a certain sort of a rally to the upside or downside. Maybe we fall further before that happens. I have no idea how it's going to happen. But for now, we're just at critical support. And the most important number here that matters is 4,300. So 4,300 is our volatility trigger also. Above this hold, upside remains, right? Underneath, downside in play. So now the level that we need to break is 4,100 and hold under, and we see sub 4,000. It's simple. And once we see sub 4,000, we'll have some panic, right? We'll have some more selling, right? We'll have see where the levels go: 3,900, 3,800, and then a relief in markets for some weeks, and then maybe a retest, and then we see. All right, but for now, that's something of the scenario I'm looking for. This is not an overnight scenario. This can take maybe months to play out, or maybe it doesn't play out at all. But this is just something that I see that's possible, right? Based on the monthly charts and based on certain things that are taking place in the market, right? And one thing that I'm going to leave you guys with today, one very, very important thing for you guys to understand, right? This is a topic that's going on in Europe, Japan, in our markets, right? The more research you do, the more you'll get to know these things. There's something in the economy that you guys need to research over the weekend. I mentioned this a few months ago, I believe. I tried to talk about this. When there's high inflation in the market, right? And then there's high unemployment. When those two things come together in the market and the economy is slowing, okay, so I'll repeat that one more time. High inflation, all right, and then there's high unemployment, right? Yet to see numbers on this, so not yet, but if it happens, okay, so keep this eye out for the coming months. So when there's high inflation, high unemployment, and then slow economy, that equals stagflation. All right, research on this topic, read up on it, is basic economics, right? So read up on this over the weekend, understand what this is. If this is the path we're going towards, the market is done for many, many months. All right, the market will be done for many, many months. Okay, and this is not something that the government just come in and figure out. All right, go back in history, what happened. I doubt those things happen today, right? The system is very strong. We have a lot more knowledge. The system has learned from the past. So just learn up on this, read up on it, just to understand certain things in the market. All right, and man, I hate when I click and this thing just comes up. So that's that. And one thing that I want to go over is DAX that I've been going over for the past few weeks. Keep an eye on this. Keep an eye on Euro stocks and DAX. All right, if this breaks 13,500 and leaves downside, we are going to catch on to it. SPX should also break 4,000, 4,100 by then. All right, or maybe it happens today. I have no idea. All right, so keep an eye on DAX. Make sure you're following the Euro stocks. Possibly, if these show some strength and they start going up, I think our market will be even much stronger then. All right, because the situations started from Europe, not from North America. Remember that. All right, and then what I want to compare here. Now, this is a dollar index. Let's just carefully look at this. All right. So this is a dollar index. All right. Now, my only point here is yesterday LB caught the move. Amazing. He saw the bonds, right? He saw the rates, Everything just matched very well, and we had a great day to the downside. All right. But my only point here covering this is some of you guys might be mistaken. You guys have to understand everything to put together. It's not just easy that, oh, dollar is strong today, let me short some stocks. That's not how it works. So if I compare this chart with any of the indices, let's say I compare this with okay, so I got NDX here, all right, tech. This chart is very different from this. It's not an inverse of this chart at all, right? This is completely different, all right? It's not the same inverse if you guys go back in time, all right? But most of the times this will match with this, the inverse, all right, tech. So for example, basically dollar, what it means, let's say for example Amazon, if it does sales in India for $100 million and the dollar is strong, that revenue when converted into USD dollars, it's not going to be high, it's going to be low, right? But when the dollar is weak, it comes down, then the same $100 million from India, the revenue they've done is a lot more in USD dollars, right? Because Amazon, they base their income, revenue, everything on dollars, right? So that's the more impact of the DXY. So that's the reason LB watches a lot of the C Limited, I think, when he talks about DXY. He's taught you guys that in the past. So that's one reason for DXY. Now, if we go over TNX, the rates, high rates, right? This chart also, sometimes when the rate goes up, tech also goes up. Sometimes it goes down, tech goes down. Sometimes they do completely opposite or they move the same. So to understand rates, compare the historical prices, compare the, I was talking to Kara yesterday, just pointing something out. So far, the recent trend that we have, right, from here with the rates, right? This is actually pretty correlates with this, right? A little inverse, right? TNX, and then we have NDX here. The time frame is a little different. In 2009, this 19 this started. This is from 2021. So just make sure you guys line this up. Don't get confused from here. But rates are strong. We break above 3. Right now, when the rates are high, we clearly know the market reacts to it. Market reacts negatively to it. So TNX, go back in historical. We're currently at resistance. If we break out higher, we continue going higher. I'm pretty sure that's bad for tech currently in the correlation. All right. To understand more details, go back in history. Go do your research online. There's a lot more to this. This is far more complex than just me making a statement. Oh, rates are up today, let me short tech. It will work most of the times, but some days it's not gonna work. So don't get stuck in that zone, right? That's my bottom point here. And then obviously UB bonds. I've been learning a lot lately for the past a few months. I've been studying a lot on it. I'm trying my best to understand as much as I can, but it's a very complex thing. Bonds usually, if I go on the monthly chart here, I was doing the historical research, right? So if I go on the monthly chart here on bonds, let's just go over this. Right, and I'll pull up SPX here on the monthly. And the reason I'm going over this is because we talk about in the group sometimes, and so this chart is not correlated with this. Like sometimes bonds go up, the market also goes up. Sometimes money comes out of bonds, market goes up. Sometimes money comes into bonds and the stock market, right? So here it's kind of different. But recently, what we see in the recent trend, there's money coming out of bonds, but where is it going? It's not going into the stock market either, right? And the bond market has a lot more market cap than the stock market. It's much bigger. Right, so now it's in play, especially in these times right now when we're seeing a lot of volatility in the market. VIX is above 30, right? So what's happening here behind the scenes? Right? There's a huge downturn in bonds, right? Cut down in half, and market is also down, but not as much. So what happens next is the bonds continue selling, right? So that's something to keep an eye on. Again, if bonds go much lower, market can still hold. If the bonds go higher, market can still hold, do vice versa. But for now, the trend right now, if I go on S&P, if I go on the recent trend, so let's go on the recent trend. The recent trend on bonds, they match with the stock market. When the bonds go down, the market is also selling off along with it, right? And then with this, we have the rising interest rates and whatnot, so everything coincides, right? So these are the things that you want to pay attention to. I'm not gonna sit here trying to teach you these things because I'm still going through all the historical stuff, like what exactly, how is it gonna impact, right? We don't need to know this as day traders, but I think if somebody's interested, it's good if you read. The more you read up on it, the more you will understand, right? But just make sure you pay attention. If you're following the rates, the bonds, or the dollar, make sure you guys understand the full impacts of it, and make sure you know that not always the moves will be the same. Right? We had the Fed yesterday, FOMC, so there's a lot of factors that were put together, the move that happened yesterday. All right, so keep this in mind. That's my bottom point. And on daily now, just some earnings. Another thing for stagflation, Facebook and Netflix are giving us some hints. So Facebook, there are rumors that they're stopping hiring, right? They're cutting on their jobs, right? And so slow economy, if high unemployment increases, right? And then obviously high inflation, that's stagflation, that's not good. Netflix also announced that they're cutting out on jobs, and that's just an ugly chart. all the way from 700 all the way towards 240, and it's still showing more to the downside. That's going to get hurt. So a lot of the stocks are not going to go nowhere. They will be dead for many years. I covered this chart yesterday, BlackBerry. This is let's just go to the monthly. A lot of stocks will follow this path. A lot of stocks that you guys see are currently right here. They have a long way to go down. Some of the stocks that are down from 300 to 90, they're probably going to go to 20, 30, even $10 in the coming months. Trust me. So be careful when you're trying to buy the dip. Be careful buying the dip. That's it. Make sure you do your full research on what to buy on, right? Make sure you do your full research. Now, these dips will be rewarding in the long run, but you have to know which stock. Now, for example, Amazon, if you go back in 2000, right? This stock got cut down from 90 to 10, I believe. So look at this. So some dips will be rewarding, don't get me wrong. So some stocks, so Amazon here was at 81.50. They sold it off, they brought it down all the way to $6.98. So they brought Amazon all the way from 90 to 698, and today it's what was the highest it hit, 3700, right? So some dips will be rewarding, but you gotta know which dip to buy. All right, you gotta buy Ricky, if the bonds go down, mutual funds will liquidate too. Yeah, so Danish, I posted something else also. I'm gonna go over VIX. So 90 to 698 to 3700. So some dips will be super rewarding, but you got to do your research on them. But not every dip will be like this, right? Cisco didn't do shit for so many years, right? Cisco just sideways. Finally, after 22 years, the stock's coming out, right? That's not what we want. You want to catch places like Amazon or Apple or something like that that dipped and went up huge. Another thing, VIX, I want to cover. In order for the VIX to hold above these levels, in order for the VIX to hold above 30 continuously, the Gamma report posted something today. In order for this to hold continuously above $30 for the VIX, some sort of headline, an event must take place, or else expect Vanna rallies coming days. All right, which obviously then the VIX cools off, and VIX cools off. All right, VIX cools off. So just know these things. Put the work in. The more homework you do, the more money you'll make. You guys saw the results from Malby. He's actually killed it for the last 2 weeks. Big props to him, right? And so some sort of headline, an event must take place for VIX to hold continuously above 30. It can happen for 2, 3 days, 4 days, but eventually it's going to come down. And so what you want to pay attention today, make sure you guys are watching the headlines, right? The breaking news. If a headline comes out today, Monday, Tuesday, if something like that happens, then obviously the market is going to see much more lower. All right, and also indices, Albie just mentioned also, indices are likely to chop, individual stocks likely to make bigger moves today. All right, but remember, stagflation, do some research on it. God bless. We'll see you guys back in the chat, and make sure you guys like the video before you